In this video, I'm going to give you some very valuable tips about market structure trading. I have a summer sale running right now. You can get 30% off my lifetime Trading Academy access, and you can also get 30% off my lifetime Discord access. Now, the Academy includes my full 30-hour course and the Discord. The Discord only option is just the Discord alone. So if you want to learn my systems, trade with me, get personal support, backtest with me, get case studies on all the trades I've taken, and access to my live trades, head over to that link in the description and you can save 30% there. If you use the code SS30 at checkout, you are going to save around £150, which is around $200 on the Trading Academy, and you'll save £75 off the Discord, which is priced a little cheaper. So thanks for listening. I'll see you in the inside. Enjoy the video. Hello everyone and welcome back to the channel. I hope you're doing well. In today's video, I'm going to talk about layers to structure. So when I say this, I mean market structure trading, which is a very popular and common way of trading nowadays, has a few layers to it that some people don't quite understand. It's fine, but if you don't understand these layers to structure, you're going to have a hard time actually trading consistently because you're going to be a little bit confused as to where structure is going at any one time. I'm making this video to clear up any confusions about market structure and show you the different layers to structure and how you can use those to your advantage. What you can see here on the chart are the two major layers to structure. We have swing structure and we have substructure. Swing structure is the overall picture, and substructure is the smaller movements that happen within the corrective moves of the large trend. Now, what we can actually do is trade with the swing structure, but we can also trade with the substructure in a kind of counter trend fashion. Now, one thing to note about all of this is it's going to change and you're going to have to adapt to this over different time frames. So swing structure can be considered as, for example, the hourly, and the substructure to the hourly swing trend is probably going to be around the 15-minute, 5-minute time frame. However, the hourly trend may be within itself substructure of a daily trend, and so on. So you do have to make sure that you are following closely the time frames that matter to you. If you're a swing trader and you only trade the daily, weekly, and 4-hour, the daily and the weekly are probably going to show you your swing structure, and you'll be able to dig into the substructure on the 4-hour time frame. However, if you are a day trader, your swing structure may be on the hourly and 4-hour, and then from there, your substructure movements may happen on the 5-minute and 1-minute. So that is a brief explanation of the layers of structure, swing structure and substructure, and an explanation of how they change across different time frames. Now what we're going to do is go to the markets. We're going to look at GBP USD for this example, and I'm going to break down a few different approaches to the swing structure and the substructure and show you what I mean live on the charts. So first of all, looking at the hourly time frame zoomed out here, what can we see? Well, we can see a downtrend, right? Because we have here a lower low, we have another lower low here, and that has broken through into this lower low that we are now in. Paired with that, we also have this lower high, and previous lower highs as well. So the hourly swing trend would be bearish, and the swing structure would be identified like this. So the substructure is going to take place within here. And as you can see, we have kind of an uptrend of its own happening right here in this structure. So what you would want to do is, obviously, if you were following the larger trend, you'd only be looking for sells. But when we start to break structure up, like we did here, this is where we could then get involved in substructure. Now, some people get a little bit confused when trading counter trend. In my opinion, counter trend doesn't really exist because there's always a pro trend that you can follow. So at this point, after breaking this structure, we have a higher high. Then we came down and formed a higher low. This came in around this demand zone. Therefore, this could have been a pro trend bullish buy. Now, obviously, we know that the swing trend started here, ended here, and the swing trend once again started here and ended here. So if we are trading this substructure, we should only be looking to trade to a lower point than the previous lower high. So what I mean by this is the previous lower high, right? If we are going to be buying through this trend, as we can safely do, we want to make sure that we are not combating this high. Because if we think about this, the only buy that we are getting here is through corrective structure. We're not actually looking to buy into new highs because we would then be fighting the trend, with the trend being bearish from this lower high, lower low, and then obviously the previous lower high and lower low beforehand. So we can safely buy from here, and it would be a pro trend buy, but we should be stopping here. Now, why would we stop here? This is the final imbalance supply at the top of the move, and if the price did push through here, we could still stay valid on shorts because we haven't broke this high. If we were to break above this high, that would then reshift the whole trend structure, and the swing structure would no longer be bearish, but it would be bullish. So at this point, we could then start looking for the larger buys up towards, larger areas of imbalance. But unless that happens, we can assume most of the time that we are going to then follow in the tracks of the swing structure, meaning when we have reached the kind of extreme point of the swing structure down move, we're probably going to reverse once again and make a new swing structure down move, as we did. So understanding the difference here basically guides you on which way you can trade and stops you getting confused about the trend. We know that this whole move is swing structure. We have bearish swing structure. But within that, there are going to be corrective moves. This is the major corrective move, and this was indicated by this first break of structure. So when we get this break, we can say, okay, well, the hourly is down, but here, the hourly substructure point is actually bullish because we've had this hourly break of structure. So we could now look to buy until the market reverses. Buys could take us towards this point here, and obviously, as previously mentioned, if this did not hold up, we could then look for continuation buys. So here we can see a demand zone, a big push through this, and then that reopens these higher areas of imbalance. So we could actually look at buys from this demand zone, which as you see would come in here, taking us towards here. This would be the extreme, so we would no longer look to trade to the upside. So within every different time frame, within every different trend, we do have swing structure and substructure, and they are going to be very valuable. Now, breaking this down to what I said before, this can actually be adapted into much lower time frames, right? This is fractal. So we can see the same thing on multiple time frames, and it's going to show us pretty much exactly what we want to see. So as an explanation then, if we were to go to this small area of structure here, we could see that even though we are bearish, the substructure is obviously bearish. If we were then to look at each swing, we have bearish move, corrective move, bearish move, corrective move, bearish move. So this is going to be the swing structure of this kind of lower time frame price, and this is the substructure, the corrective moves through that. Now, if we were to look, for example, at this price action here, we could say, okay, well, at this point, we've broken up to a higher high. So we could look for a pullback in, buy from demand, take this towards the next supply, which would be around this point. Then we would close out our trades and sell into the next swing structure move. So you can see once again the same pattern repeating where we have the swing structure, then the substructure here. That closes out at supply, then we have the next leg of swing structure, right? So it's fractal, it's entirely fractal. You don't have to be trading hourly like I am here. This is going to work on the daily chart, this will work on the 1 minute chart. Whatever time frame you go to, you're going to see the same kind of patterns. But understanding that difference between substructure and swing structure, being able to identify the overall swing structure picture of the market, and then understanding where you should stop trading to in the substructure is going to help you from getting caught up in those kind of counter trend moves. So some people would never take a trade like the one we've covered here because they would say, well, this is obviously counter trend, right? The trend is obviously down. So why would we be buying? Well, the thing I say to that is it's obviously not down anymore. We've broken down, we've made this low, but now we've broken up. So we can safely trade on the way up here, but we should never look to extend those buys past this high here because the chances are we're going to reverse before we get there and sell off. We should only look to trade past this high once we have broken this high. So if we were to break above, we could then look for pullbacks and those would be much larger buys. But most of the time, we are actually just going to cap out, continue with the swing structure and sell off back down. So let's take a look at a live example around where price is now. If we go to the hourly, we can once again identify things from a swing and substructure point of view. So here we can see the swing structure has pushed down. So large swing structure is going to be bearish. If we then look at the hourly trend that we've got going on right now, we have had a break of structure here. That has broken us into bullish structure, right? So from this point, we can consider, okay, so this has actually opened the doors to a substructure uptrend, this being the obviously swing down move. Now we've broken up, so we could look for, right, this is the kind of move we've had, right? So we could now look for some buys, but we obviously wouldn't want to target past the swing structure high. So what we could do is, well, first of all, we could obviously just target this point here. That's going to be a safe trade. As you can see, buy came in from demand, took us all the way into there. But we should never be looking to buy, for example, past this point here. So any buys that we do take should stop there and shouldn't go any higher. Obviously, we want to consider imbalances and things like that as well, and supply zones, because these will cap price. If we think about it, this is still primarily bearish, right? But the structure here on the low time frame suggests that we may have a buying opportunity for some time. So what we could actually look to do is buy up towards, for example, this point here, or maybe this point here. We'd basically be looking for clear imbalanced supply zones to target for buys. So if we were to get a buy on, we can see, well, the structure is still bullish. So let's say market comes down towards this demand. We could then look for a buy to here. If this broke, we could look for a buy to here. If this broke, we could even look for a buy higher. But chances are, within the trend, within the swing structure, we probably will eventually flip back down and continue to make a lower low, which would be the swing structure movement continuing. So that hourly trend that we've been looking at, lower high, lower low, lower high, lower low, we could now be looking for a new lower high to lead into a lower low. And that is what we are talking about when I talk about layers of structure. So to recap on what I've just been talking about, there are two key types of structure: swing structure and substructure. Swing structure is the large pro-trend move up. Substructure is going to be a smaller downtrend, which is also pro-trend, but on a lower time frame. So swing structure leads the market, substructure does give opportunities as well, and this is how we know that we are safely trading counter trend. So in order for substructure moves to be valid, we need to see some, clear confirmations. We can't just be YOLOing into every bottom in the market. But let's say this is our hourly swing trend move down. We have a few of these, small corrections in there. If we are showing a meaningful hourly break after forming a lower low, we would then see, okay, we have a higher high. We could then look to buy pro trend until major areas of supply, never past this point. And then when we get to this point, if we were to see a flip back down, this is where we could sell in for the larger movements to continue the trend down. The difference between the substructure moves and the swing structure moves is that swing structure moves can be extended far past the low of the previous swing move. With substructure movements, we are only looking to trade through the previous leg of price action. So we are only looking to, for example, buy it from here into here, or if it was the other way around, we would only be looking to sell from here down into here, whereas the buy that then came in could extend much further because this is the larger trend. That is all for today's video, going through layers of structure. I hope this has given you some value. I know this is something a lot of people get confused with, so I thought, you know what, I'll make a video on it. I haven't done one in a couple of weeks anyway, and hopefully this can give you some clarity and some guidance on making good trades in the future. So thank you for watching. I hope you've enjoyed this. If you want to learn more from me, you can head over to my YouTube channel. There's a lot of free videos there. And if you want to go deep and learn everything that I teach, you can head over to the link in the description. I do have a summer sale running where you'll save 30% off lifetime trading academy access. So whether you want to go the in-depth paid route or you just want to find some more gems on my channel, you're definitely going to find value whichever option you choose. Let me know what you've learned in this video in the comments, and please drop a like. It's going to help me to benefit more people with this video. Thanks for watching, and I'll see you in the next one.